Good, always good, believe me. Good afternoon, everyone. I hope you are all doing well. I would like to begin by acknowledging that we live and work on the traditional territories of many indigenous nations across Turtle Island. While we meet today on a virtual platform, we must recognize the importance of the land and our treaty agreements. We acknowledge the ancestral and unceded territories of all Inuit, Métis, and First Nations peoples. As our spinal cord injury Ontario community encompasses many geographies, we ask that everyone take a few moments of their day to find out which unceded or treaty territories you may live and work on. You can use the link www.native-land.ca to learn more. For those of you who do not know me, my name is Federico, and I am a peer program coordinator for Spinal Cord Injury Ontario for the Ottawa-Champlain area. I would like to also introduce you to my co-host and manager of the peer program, Lubna Aslam, who is there. Well, let's start with the meat and potatoes. There are several financial considerations that extend beyond the typical financing planning scenario when we live with a spinal cord injury or other physical disability. Today, we are starting the Peer Connections Dollars and Cents series. This series is sponsored by Meridian Credit Union, and it's comprised of 3 workshops to provide the information that all of us need to get our financial house in order. We'll have expert information and opportunities to ask questions that help us, guide our decision and planning. The first presentation of the series is Managing Your Financial Future. My financial future too. Meridian Credit Union, thank you for making this presentation possible, and thank you all for joining us today to our virtual peer connection. We have today 2 guests. First, Doug Carroll and Jaspreet Dhaliwal after. Doug Carroll, he is a multiple certificate professional. It's a tax and state specialist for Aviso Wealth, a wealth management partner to credit unions across Canada. He previously ran an estate planning law practice and was an advanced case consultant with a life insurer and a mutual fund provider. Doug also holds a business degree and a master's of law specializing in tax, and is qualified as a certified financial planner and a trust and estate practitioner. He's been doing this for 25 plus years, from written articles to individual case consultations, and of course, webcasts and what we are doing today. Doug is the friend that you want to have. Doug, can you hear me?
I can hear you. I had myself muted while you were speaking, but yes, I can hear you.
That's good. That's good. We'll start with your presentation first. Please feel free to share your camera, and the floor is yours.
Okay, I'm going to push this up onto the screen here. My PowerPoint screen. I had it running for a second, so I just want to make sure that it's actually showing up right now. And you can let me know. I can still see you, Federico. You're seeing the blue screen mainly. That's up there, and it says Disability Income Support 2022. And I do have the year on there because the numbers that I'm going to be showing you are for the current year. And so I've highlighted them, or I've bold-faced those as I'm going through this. I just want to make a couple of lead-in comments before I get into the content itself. A couple of things that in terms of my background and my involvement here. As Federico mentioned, I used to run a law practice where I was principally doing estate planning work. I did some other things that related to it, but that was the main thing that I spent my time on. And in doing that, I would see people quite often in their homes, and particularly seniors that didn't want to get out or couldn't get out for whatever reason, and spent a lot of time in conversations with people about what kind of planning they wanted to do from an estate planning perspective. And I looked at things very broadly. Within that, one of the things that I did do, and it had to relate to my mom. My mom had eye issues throughout her life, and is still living today at 91 coming up. And so I had some connections with the CNIB, the Canadian National Institute for the Blind, and dealt with a number of clients on pro bono type of issues with that. So these kinds of things about disability income support, I am familiar with the fact, and you'll see that these things are nice to be available, but they're complicated, unfortunately. And so I did deal with a number of people during the time of my law practice with these issues, and so do appreciate that this does present you with a challenge, apart from the personal challenges. It presents you with a challenge to navigate through these things. So what I'm going to do here is I'm going to take you through the different kinds of disability income support that are available through public sources. And when I say that, I mean through government sources that are available to you, as well as how you might coordinate that with your own planning and saving and different steps that you can take that provide you with the financial needs that you have, and how it then can connect up with those government sources. So I'm going to speak for maybe 20 to 30 minutes on the topic here. There's a lot of content in here, okay? So just fair to let you know about that. There is an article, a written piece that connects up with this, that runs the exact same route as I'm going through here, with the same titles and subtitles, with the numbers that I'm showing you here, and with further explanation of how these things are tied together. So as I'm going through here, don't feel like you have to write like crazy to get all of these points down. Write down what you would like, but otherwise you can digest the content, hopefully, as I'm going through this, so that it's manageable, and not feel that you're going to be tested on this as immediately as we wrap things up, okay? So 3 different groups that I'm going to take you through, and there are about 12 slides that I'll go through, so it's the bulleted points that you see down below. The first group about direct financial assistance, as I refer to it. The second about income tax support or relief. And then thirdly, private planning things that you are doing that are your savings, but boosted and supported by government sources of support for you. So I'll start off with the Canada Pension Plan. And with the Canada Pension Plan, the way that it operates in a real general sense, what happens with Canada Pension Plan is that when we are working, we are obligated in our working lives to contribute in premiums for the Canada Pension Plan towards our later pension that we will get for ourselves. Both ourselves as employees and our employers are required to put money into the plan. It's an insurance-based plan, so we put the premiums in and we get credit for having done that. And then the standard pension that we look forward to is the retirement pension that we will receive. However, there are other components, or maybe it's not even a however, and there are other components to the Canada Pension Plan, one of which is the disability pension that someone may be able to receive from the Canada Pension Plan. So in order to receive amounts from Canada Pension Plan, you have to have been a contributor into the plan. You have to have been working and making premium payments into the plan. And if you have done that, and you've done it for a certain period of time, then you will be entitled to receive a disability pension. And there's two, and you'll see on the first couple of bullet points here, there are two possible time periods of contribution that qualify you to receive a disability pension. Either that you have been a contributor for 4 of the last 6 years, or that you have been a contributor for 25 years, over the course of 25 years, including 3 of the last 6 years. And if you fall into those categories, the qualification categories, then you'll be entitled to receive a disability pension from the CPP, the Canada Pension Plan. The way that it works is there is a base level once you qualified, which is $525 a month currently. And then based on the amount of premiums you have paid during the qualifying period, you will get an additional amount. And the maximum that you can receive is $1,457. So as I was saying earlier, some of the things that you'll see on the screen, they will be bold-faced, and they're the blue bold-faced items. They're the dollar amounts that I'm putting on here as the highlighted. If you are a person who is up to the point where you are starting your retirement pension, then if you started it, then you can't get the regular disability pension. For whatever reason, from the administration of the Canada Pension Plan, there is a distinction made for people who are starting the Canada Pension Plan retirement pension, and so the type of disability pension that you're entitled to once you have started your retirement pension is called the post-retirement disability benefit, because a person can start the Canada Pension Plan retirement pension as early as age 60. And then once that happens, you will receive, if you've started your retirement pension, you will receive your calculated retirement pension, and you will receive a flat rate amount under the post-retirement benefit, which will be paid between 60 and 65 is the time period that version of the disability pension comes to you. And it is strictly the flat rate amount, because your retirement pension is the one which is based on, or the component which is based on, the amount of premiums that you've paid. If you are someone who is a disability pensioner under the CPP and you have children, then your children may be qualified to receive a children's benefit if they're under the age of 25, and the amount that they will receive is a flat monthly amount, and currently that stands at $265. All of these figures are indexed on an annual basis. So these are the dollar figures paid during the course of 2022. So that's one of the direct assistance payments that you can receive. Now, looking over towards you having a child, if that's the situation you're in, a child who qualifies for the disability tax credit, and I'll come to the qualification criteria for the disability tax credit when I move on to the next section. But as a starting point here, for disability income support from the government, direct payments, whereas the disability tax credit has to do with your income tax obligations and where you can get support there. The child disability benefit is a part of the broader Canada Child Benefit. So as a parent, if you have children under the age of 17, you may be entitled to receive a monthly payment from the government for your children under the age of 17. There's a different amount that's available for children who are under the age of 6, and then those who are between 6 and 17. So the figures that I'm showing here are the Canada Disability component of the Canada Child Benefit. And you can see the acronyms here, and because the names are quite similar, which makes it challenging to try and get your head around sometimes. But the amounts that are showing here are the maximum amounts that are payable for the Canada Disability Benefit. If you qualify for this, you will also be getting the Canada Child Benefit, which is actually a larger amount. And then this is the addition on top of that, if the child that you have is a disability tax credit qualified child. So these are the additional amounts that that will be paid if that's the case for you. And the reason why I say you may receive these things is because these are income tested. If your income is above about $70,000 or so, then the amounts that you receive are progressively reduced down, and there is a point at which your income will mean that you won't get either of these benefits. So just be aware of that. And as I said, in the written piece, it's got more details and hyperlinks that can take you to the source information for the material here. In terms of the provincial support, so those are the federal types of support. In terms of provincial support for a person who has a disability, we have the Ontario Disability Support Plan, or ODSP, and the ODSP has its own definitions, criteria for qualification, and I've got the base qualification showing here: substantial mental or physical impairment that is continuous or recurring, lasting a year or longer. I was reading it directly, so I got it straight there. In applying for ODSP, if you're already qualified, you would know that about the process. You have a case officer representing ODSP who will discuss with you the financial disclosure that you must make in order to qualify for payments for the ODSP. The ODSP is paid out in two ways, two primary ways. There is basic income support, and then there's also a shelter allowance for the ODSP. And I'm not going to read through all the details and give you all these points here, but the maximums that you might get between these two do depend on how many people are in the household. And so the figure that I'm showing here is just a representative amount to give you a sense of it: $672 for the basic income support, and then $497 for the shelter allowance. So that's for a single person. If you are a couple, if you both have a disability, then that's different. If you have one has a disability, again, it's a different number. If you have further children in the house, it changes the figures again. So very difficult to give you a full snapshot of what's going on, but this gives you a sense of what the figures are. If you earn income, then it can reduce down the amount that you will receive from the ODSP. And depending on the value of the assets, the property that you own, again, it can be a limitation to your ability to receive ODSP. It could reduce down the amounts that you might be entitled to. So I'll leave it at that, because it's a very large and complicated system, but it does provide direct support. The one point I will really emphasize here is the point that I've got in the middle, where I've got in quotes, to help cover. The ODSP is designed to help cover the costs of various things that you face, but there is an obligation on an ODSP recipient to look into and exhaust personal sources of income, all the places where you might be able to obtain support first, and then the ODSP is then assisting you beyond those things that you have looked into and exhausted yourself, which can be a surprise to people who first get into it, thinking that, oh, here's my first place where I can get support, and it's from the Ontario government in the SET program. They certainly will provide you with some guidance, but in terms of the stage of their involvement, the expectation is, the principle behind it is that you first exhaust your own sources, and then the ODSP will help out from there. The second grouping of topics that I want to touch on are income tax relief. And without getting into an income tax lesson here, there are three main types of ways that we get relief, any of us get relief from the income tax system. Either we get to claim a deduction, so it's something that we spend money on, we have our income, and then the amount that we spend reduces down the amount of income that the tax rates are applied to. So a deduction is generally going to be the most valuable type of tax relief that we get from the income tax system, because in our income tax system, as you go up to higher levels of income, you pay higher rates of tax. So if you get a deduction, that brings you down from your highest tax bracket lower, which tends to give you the best net reduction in your tax. We also have what are called tax credits, and tax credits reduce the amount of tax that you have to pay. So there's first a calculation of how much tax you would owe, and then if you qualify for the tax credit, and there's a number of them, then it reduces the amount of tax that you pay. So how much do you owe on the first calculation? And then if you qualify under the credit, then you get to reduce the amount of tax that you have to pay. Tax credits are generally based on the lowest tax bracket rate, which in the federal system is a 15% rate, and then provincially it depends on province, but provincially it's about 5% for Ontario. And then the third type of relief that we can get is what are called refundable tax credits, and these can be in different forms, but the basic idea with them is, with the middle one where we've got the minus sign, you can only reduce your tax down to zero. That's it. But with you can't use it anymore beyond taking your tax liability to zero. But with the refundable tax credits, you actually can get payments from the government for the amounts that that you have of refundable tax credits. Federico, did you want to come back on again, or you just do you have any questions that had come up that I didn't see here, or shall I continue on?
No questions at this point. You can carry on.
Okay. So the main credit that that we want to touch on is the disability credit. And for the disability credit, it's one of the non-refundable types. So it can only take your tax liability down to zero. The qualification criteria for it is that you have a severe, prolonged disability, and in order to prove to the government that you're entitled to it, then a health practitioner must complete the form, which is the 2201, and that has to be submitted to confirm that you have the condition that entitles you to claim the disability tax credit. With the disability tax credit, with all tax credits, there's an expressed amount, is what it's called, and then the amount is multiplied by the credit rate. So the dollar figures that I'm showing you here, the bold-faced dollar figures, that's the dollar value of the credit that is available to you. So the basic credit that's available is $8,870 on the current year, 2022. Once you multiply it by the credit rate, it is actually worth as much as $1,331. If you have a child who is the person with the disability, then there is the supplement that can add on as much as $776 to that. So the maximum possible value for the two is a little over $2,100. So that's the core qualification. And as you'll see as I come over to talk about some of the other programs, qualifying for the disability tax credit, and many of you would already know this, qualifying for the disability tax credit does give you this tax relief, but it also opens up the possibilities of getting other types of benefits that relate to having a disability and relief that is in the tax system. A number of those things, and I'm not going to go through these in detail here, but a number of the other things that flow from the fact that you are able to claim the disability tax credit also can reduce down your taxes. So there's something called the disability supports deduction, where you have spent money to help you live a better life. There are criteria, definitions that have to be fulfilled for those particular expenses. So that allows you to take a deduction for certain things that you've spent money on. We also have the medical expense tax credit, which again is a quite complicated arrangement, how it operates. But if you have significant medical expenses, then you can get a tax credit for the expenses that you've had the outlay for. There is something called the refundable medical expense supplement. It is specifically targeted at people who are at low income. So there is a threshold beyond which it starts being unavailable. It starts being clawed back, but it can be worth up to $1,300. In terms of the activities that you might be involved in, like buying a house, if you are buying a house, there is what's called the home buyer's amount. When any person buys a house as a first-time home buyer, if you are somebody who has a disability, then you don't necessarily have to be a first-time home buyer to be able to claim this credit, which is worth up to $750. You do have to be going into the new property that you're acquiring so that you can better deal with the disability that you have generally in order to claim the credit. And then there is this other thing called the home accessibility tax credit. And what it is designed to do is for people who are over the age of 65 who have a disability, you can do renovations to your property to make it more accessible, and the credit is worth up to currently $1,500. But then in the federal budget that just came out and hasn't been passed into law fully yet, the amount is proposed to be increased, so it could be worth as much as $3,000 if you're making modifications to your home in order to make it more accessible to yourself. You still have to spend the money, but based on the amount you spend, up to $20,000, you can get a tax credit that in turn can be worth up to $3,000. Just some other types, I've broken these down between the first grouping that we went through and this one, but the other one is things that you might claim for yourself. These ones are more in the category, and it's kind of gray, the distinction between these, but these ones are more in the category of things that you might do that are a little bit a degree beyond or degree out from your core support of yourself because of the disability, or other people who are around you who may be able to claim credits because they or you are supporting someone who has a disability. So we have what's called the caregiver amount. If somebody is supporting another person, a family member, a spouse, a minor child, a grandchild, relatives, it's a reasonably broad definition, then there could be a credit of a little over $1,100. If you are incurring childcare expenses, then you may be able to claim those expenses if they're enabling you to work, to go to school, to do research. That's something which again is there is a special extra entitlement if there's a disability involved. And there are the possibilities of transferring certain amounts from one person to another if the person who is otherwise able to claim a credit can't use those tax credits, then they may be able to be transferred to another person close to you. So the disability credit, the medical expense, you can transfer those between spouses. If they can't be used by the one, then potentially they can go for the other. And then the last thing here is the GST, or the harmonized sales tax, is not charged on certain types of items where there's a disability issue that might be involved. The things that you can also do for yourself is to be working, obviously, for yourself. And when you are working for yourself, there's something called the Canada Workers Benefit that is available to you as an individual, to a person who is working, irrespective of whether you have a disability. And then if you are working and you are at lower income and you are claiming the Canada Workers Benefit, then there is a disability supplement. I won't go, again, very complicated the way that this operates, but if you are working and you are earning an income and you have a disability, you may be able to claim this credit to help, again, reduce down your tax bill. Now, One of the things that I'm not going to get into in great detail is the Registered Disability Savings Plan, the RDSP. I should probably have that phrase directly across here. That is a topic that my friend and colleague Steve Badali with Meridian, he'll be speaking about that on the next of these sessions, I believe. He'll be going into that in much greater detail. But just as a rough outline of the RDSP, if you claim the disability tax credit and you're a Canadian resident, then you can use this savings plan. And what it allows you to do is to put money into the plan. It's your own money that goes in. You don't get a deduction for the money that goes in, but then the investment accumulation within the plan is tax sheltered until the money is drawn out. And your own money comes out tax-free, but then the investment accumulation will be taxed, but it's deferred until you actually draw the money out. Larger than that, though, in my opinion, are the support programs, the Canada Disability Savings Bond, which is free money that the government will put in there, whether or not, or irrespective of how much you put in, and then the Canada Disability Savings Grant, which is a matching program where when you put money in, the government will then match into that as much as 300% of certain amounts that you put in. So if you are low income and you contribute in about $1,500, the government might put in as much as $3,500. So again, Steve's going to go into that in greater detail when he's on the next of these sessions. And then the last thing I think that I have here that I want to touch on is about trust planning. So this is something that that you can do either for yourself, if you're the person who has a disability, or if you're a parent and you're looking at taking care of your child or someone else, but generally of your child, then you might look at setting up one or more trusts to take care of that person, or that person possibly being yourself, either you setting up the trust or having someone set up a trust for your benefit. With the trust, one of the most common things that I've heard for years, decades, is people saying that they've heard about this Henson Trust and would like to set one up because somebody in the family has a disability. What the so-called Henson Trust does is, if you are a recipient of Ontario Disability Support, ODSP, or it's, it works across the country, all the provinces with their respective programs. If you are a recipient of that, then as I mentioned earlier, there are asset and income tests as to whether you can receive it and how much you can receive. If there is money that is held in trust for you, where someone else has the legal ownership, but you have the beneficial entitlement to that, whether it's current or out in the future that you're going to receive it. If there is a trust set up where the trustee has full discretion over the timing of the payment of that to you, then the ODSP administration will not include those assets in your assets in determining whether you qualify for ODSP. So that can be helpful to preserve ODSP. You just have to be careful in doing that if you're not an ODSP recipient, then it might create more complication than is necessary to manage your funds. So that's what a Henson Trust is intended to do. It's a non-discretionary trust. And then more broadly with trust planning, if a trust is set up out of a person's will, so this could be a parent taking care of a child, or even a grandparent taking care of a child. And when I say child, I just mean down generation, not necessarily a young child. If someone sets up a trust to run out of their will for the benefit of someone who has a disability, then our tax system allows for that trust to be taxed in a preferred way. Like you and me, it will be taxed at low tax bracket levels, and it will work its way up through the tax brackets. And the distinction there is that if a trust is created during a person's lifetime, it's automatically taxed at the top tax bracket, which is over 50%. So parents could look at setting up one of these trusts for the benefit of a child who has a disability, to give extra tax planning, which means more cash flow availability for that child when the parent is no longer around. So the big challenge, though, having said that, is usually to decide who's going to be the trustee for that trust, which is a conversation to have with the lawyer who can give guidance on the coordination of these things. So that's everything that I have. As I said, there is that written piece. So if you got lost somewhere in there, or more than once, there's that written piece that that will take you through the content and give you the references so that you can look up the original sources. I'm going to pull you back in then, Federico, and see if there are any questions now, or if we're going to defer on that. I'll let you decide how we do that.
Everyone, you can post your questions in the chat. And
I think, Doug, we need your email address if you're willing to share it, because there are people who were asking how to contact you.
Okay, so what I will do, just because I know it sounds crazy, but because I'm Meridian Credit Union is the sponsor, and so they've brought me in. I'm connected to Meridian. What I'll do is I'll make sure that my colleagues at Meridian get in touch and give an address where we can share the document here. Not that you're not entitled to have my email address, but just so we route things through that way. It's a PDF document. It's 5 or 6 pages long, and so we'll make sure that that someone from Meridian provides an email address, and we get that to you if you want that piece now.
That's good. That's good. So let's no questions. You can also, if you want to make a question, anyone, I mean, you can unmute yourself and make your question. Okay. Okay, take a minute to think about it. We can now introduce.
I do have a question.
Oh, go ahead.
There was a part where you spoke about home accessibility credit, I believe.
Yes.
Is it only for individuals who are over 60 years of age? So for example, if there is someone who's 40 or 50 and they have a ramp or a porch lift replaced, can they apply to this credit?
Yeah, so it is for, you have to be over 65 and claim the disability tax credit, unfortunately. So there's the age cutoff associated with it. The other part, so I think I mentioned that the current amount, the legislated amount, is up to $10,000 that you spend, and you'll get the credit, and that's going to be doubled as long as the budget gets passed. And I don't think that any of the parties are in opposition to this component of it. It'll get doubled up to $20,000. So that's of no assistance to you if you're not age 65. However, and this may not either be assistance to you, unfortunately, there is another, the name escapes me, but another new type of tax credit which is being introduced, which allows for the creation of a separate adjoining part to a property that a family member might build to allow someone else to live in that separate apartment, let's say, granny suites, as we refer to them sometimes, for someone who claims the disability tax credit or is over the age of 65. So that may be something that might be available, but it's a different type of arrangement. It would cover things including accessibility ramp, but whether you would qualify or the person who would be doing that for you would qualify as an adjoining suite would depend on the definitions, the ultimate definitions that they have for that that particular credit. That is actually based on spending up to $50,000 on that new adjoining suite, and so the tax credit would then be worth about $7,500 at the 15% rate. I don't think that helps you, unfortunately, from what you're saying, but it is something to look into as a possibility of how things might be renovated in future.
Okay, thank you, Doug. There's some questions. People that want to make question. It's Siobhan.
Yeah, Siobhan, and then we have Shannon, and then Karen has a question in the chat box. So first Siobhan, and then Shannon, and then Karen's question from the chat box.
Good.
Hi, yes, thank you. I'm currently 60. I wonder how if at all, the post-retirement disability benefit might apply to me.
Okay, so I know I probably
I'm
didn't
on
describe it in the
CPP.
best way.
I'm on
Okay.
CPP disability.
Okay, so if you're on the CPP disability pension, get in touch with CPP administration to confirm how this would might affect you. But if you're on a CPP disability pension as you went in through to age 60, then I believe that you'll continue on with that CPP disability pension. You do have the option to take a CPP retirement pension, and then it will be the calculated amount that you receive on the CPP retirement pension plus the flat rate. But as you are receiving right now, you will be receiving a flat rate plus a calculated amount based on your past CPP premiums being paid. And so check with the CPP administration about whether you can switch over to do the CPP retirement pension plus the post-retirement benefit, or if you should, and when I say should, it's a financial calculation, whether you should continue on with how you are receiving your CPP disability pension currently.
Thank you. I have one more question, if you don't mind.
Sure.
Yeah. I had this question before I turned 60, and I was told, no, I shouldn't bother. Is the registered disability savings plan still applicable to me or not?
So the Rdsp, and again, Steve's going to give much more detail on this, but the Rdsp, you can open one before the end of the year that you turn 59. So if you're 60 now and you don't have one open, 49. You can't open one.
49.
No, 59. 59 is the date for opening it. You can only get the government support amounts, the disability, the CDSB, the bond money, and the CDSG, the grant money. You can only get those up until age 49. But opening a plan, you can open one all the way up to the point that you are until the end of the year that you turn 59. So if you're 60 now and you have not yet opened one, then you won't be able to open one at this point.
Oh, okay. Thank you.
Okay.
Thanks so much.
Okay, Shannon.
Hi, I'm receiving a my Canada pension plus a disability pension, and my fiance works. What is lower income considered?
Lower income. That's kind of a complicated question. I wouldn't be able to well, one, I can't answer it right now, but as to what qualifies as income, it's your income under the CPP that you get the payment on, but the CPP disability pension is not income tested. Some of the benefits you may receive are income tested, and it's possible that you receiving the CPP disability pension might affect a private disability support plan that maybe you have, but the CPP disability pension itself, so it stands on its own, and it is based on you, on your own. I hope that's an okay answer, but there's a lot of parts to that the question might go into. So I'm not sure whether I can provide any more than that.
Yeah, I was just wondering, like with us getting married, if we make say 70,000 a year in total, or 90,000 a year in total, if that's considered low income. I would doubt it.
Yeah, well, I take a read through the written piece, and you'll see the places where family income affects certain types of benefits, but the CPP disability pension is not one of those things that's affected. Definitely the provincial support is affected by that, either yourself or the family. If there's if you're a couple, if you're a household, then it's going to affect that.
Okay, thank you.
Okay, now I'm just going to look at the question here that Karen put in here. The question is, can the disability retirement savings plan be used to decrease capital gains? And the answer is there isn't a direct connection between the two. When you have capital gains, they are taxable to you. Half of capital gains are taxable in a non-registered investment. So if you have a capital gain inside of an RSP or a RIF that you're owning, then that doesn't get taxed to you until you draw the money out of those plans. But if you have a capital gain in a non-registered investment account, then half of the capital gain is taxable, and there's really no coordination with the Rdsp with that. Sometimes what people might do is make a contribution if they have Rsp room, make a contribution into an RSP, and when you make a contribution into an RSP, you get a tax deduction for that. It's not that that is directly connected to the fact that you got a capital gain. It's just that the capital gain is a taxable amount to you, or the half of it is taxable. And so if you had the cash available, maybe you effectively purchase yourself a deduction by putting money into RSP in a year that you have a capital gain that might push you up into a higher level of income, and then you make an RSP contribution that pushes you back down to some extent. But the two are not connected, the Rdsp and capital gains. Sue, you have your hand up. And you're muted right now, by the way.
Sorry. So I just had a question about the CPP. So my son is 33, and so he obviously doesn't have 25 years of work for the CPP disability. But if the last 4 out of the 6 years he worked seasonal work, so it's not like a full year, would that count?
Yeah, I don't know if that does count. I just put those quickie bullet points in there so that there was some reference point, but at least I would look into that. And the CPP definitions, they're quite detailed, and they have pretty good Q&A when you put in your, they say, well, are you this or that? And you go, yes, and then it takes you another screen and well, are you this and that? And so it helps you out on their site to figure that out. It's worth looking into, definitely. It might be a small amount, but if he gets over the threshold, then he gets the basic amount. He might have a nominal amount as the extra, but he get the base amount, the 5 1/4 that's payable currently.
Okay, thank you.
Okay.
Okay, I'm going to introduce now Jasprit Dhaliwal. She's a member of the peer team and is, oh, where did it go? Oh, there it is. She's a member of our peer team and she's also a peer mentor. She has worked previously at a tax preparation firm and will be sharing her lived experience and knowledge with disability tax credit and other relevant information. So welcome, Jasprit.
Thanks, Federico. Yeah, some of this might be a repeat of what Doug has already said, so apologies if any of it is sort of like a repeat. I'm going to focus more on the disability tax credit just because that applies to me and it's something that I've learned more about. So the disability tax credit, it's called DTC for short. It's a non-refundable credit, meaning that it only reduces your taxes payable, or if you will, your tax liability. So if your tax liability is 0, which it might be due to low income or non-taxable income such as Odsp, you can't reduce your already 0 taxes to a negative number. And I tell you this because the DTC is not a grant, a bond, it's not a refund or anything of monetary value. It's simply a non-refundable credit to reduce taxes. And so the intended purpose of the DTC is to lower a person's tax liability due to them working or receiving taxable sources of income. It doesn't matter necessarily how much you might have incurred in medical bills if you don't have the taxable income to utilize the credit. And so, as Doug mentioned, somebody, you can transfer that credit to somebody. So if there's a spouse or someone supporting the person with the DTC who has working income, you can transfer it to them. So I was injured in my teens and I lived at home until my mid-20s. I used to transfer the disability tax credit to my parents. And somebody else might be able to transfer it to their spouse. And it made sense when I lived with my parents. I didn't have any taxable income. They supported me financially and many other ways. And so they worked, and it made sense to apply to their return and lower their sort of the amount owing, whereas I was probably gonna get, you know, whatever my refund was or wasn't. So it made sense in my situation to transfer it to them. There's that. So to apply for the DTC, it's an application that you have to fill out. It's filled out by you and your doctor. Part A is filled out by you. Part B is filled out by your doctor. It is then mailed to your nearest tax center, or it can be electronically submitted through your CRA My account. And I'm going to mention the CRA My account at the end as well. I think having access to your CRA My account is helpful. It's very helpful for me. I'm able to go in and look at my notice of assessments and past tax year returns and the credits I might be getting and things like that. So that's something I might mention again. What else do I want you to know? So the form does have a section where you can indicate you want adjustments made to your past year tax returns. So you get the application for the disability tax credit, you fill out part A, your doctor fills out part B, and then in part A there is a section where you can say, I would like adjustments to be made to my other returns if that disability tax credit is going to be backdated. Another thing to note is your doctor may have a fee for completing the paperwork, and this is something that you are responsible for. I think my doctor's fee was about $10, $15. This is a fee that I was responsible for. What else? If I had mentioned, you can make adjustments to your returns. So if you filed a return and you need to make an adjustment, please know you can go back 10 years to make an adjustment to your tax returns. So this year you can file returns or make adjustments as far back as 2012. However, the DTC will be subject to the date of onset of disability. So for example, even though you can make adjustments as far back as 2012, if the date of onset of disability was 2018, you can't apply your disability tax credit to years before 2018. I have much appreciated learning about the 10 years and making adjustments because I didn't really know much about the medical expenses that I can put onto my tax return until I started working at this tax preparation firm. And I had bought a mobility device out of pocket about 7 years ago. Not once thought, hey, I can put this on as a medical expense on my return. I learned about the adjustments that can be made. And then it was just a fairly easy process of doing a T1 adjustment, they call it, and then just adding it to that year that I had bought that mobility device. And then there are other things that you can put on for medical expenses. I'll try to put a link into the chat box of the CRA account where you can sort of search up different medical expenses, but know that things like blue pads, incontinence pads, and underwears are considered medical expenses. As mentioned, mobility devices are considered medical expenses, prescriptions, therapies like physio and massage can be considered medical expenses. Just save all your receipts. This is what I do. I save all my receipts related to medical expenses. And then that way, at the end of the year, I know everything that I've paid for out of pocket. I was actually telling Federico before this event that I have a notebook where at the beginning of the year, I'll put in all of the months. And then as I go through, I will put down sort of what my medical expense was. So May 1st, I might have bought a prescription. I paid this much out of pocket. May 10th, maybe I went and got some new tires for my chair. I didn't, but let's say I did. That's a medical expense I paid out of pocket. I have those listed. This is just something I do. That way at the end of the year, I go back, I look at all my medical expenses. I know what I paid for pocket and I apply them to my tax return. So just something that I do. And then, as Doug mentioned, there are other important things to look into. So home renovations, disability supports deductions. You can also claim a tenant care with a DTC on file. This is just something to look into further. There is amounts and amounts that go into this. So if you're putting a tenant care onto your tax return, get more information on that. There are some important numbers there that matter. Another thing I learned was service animals. I don't have one, but service animals, vet bills and foods can also be claimed if you have a if you're certified to use a service animal. And that's it. Those were my thoughts. I hope that was clear. And I think Lubna might have put the link to my account in the chat box. Thank you.
There is a question from Karen that has not been answered, so I'm going to pose that question to Doug.
The one about the capital gains, decreasing the capital gains.
Please. Yeah,
I think he did, didn't you?
Yeah. Okay.
Yeah.
Yeah. Thank you, Lubna.
As Jaspreet's just finished speaking there, I want to say that my background and the way I'm presenting things is from the, again, I'm not currently practicing, but from kind of a high level umbrella. Here are the things that are available. And so it's really good to hear the specific things that Jaspreet got into there about how this applies and the specific items that are available. The one thing I'd add to that, and that's great that you keep a journal that way. Mind you, you're working for a tax preparation firm, so you kind of got that on your mind. The one thing that I would add to that is with the medical expense tax credit, depending on when you expect expenses to be incurred, you don't have to claim those on a calendar year basis. You can actually pick a day during the course of the year, and you can add up all of the expenses leading up to that day that ends in that year. So if you've got a big lumpy expense that happens in a July, and then that's my dog, by the way, a lumpy expense that happens in a July, and then you have one that's the following May, you could choose a year end that captures both of those large expenses to be able to claim in a single tax return year, which might net be better, more valuable to you, which is what your tax preparer can help you decide strategically what would work best for you.
Can I ask a question? It's Wade Cook.
Sure, go ahead.
I'll ask it of Jaspreet, I think. If a child has a service animal, can the parents claim that on their tax return?
If it's okay, I might pass that on to Doug. If Doug, you know the answer to that.
I don't know the answer to that directly. I know that as you were saying, Jaspreet, as you were saying, I had certain types of things can be transferred from spouses or from the person who claims disability if that person is a dependent upon the potential claimant. I don't know if that falls under the category. Again, the written piece that I've got has a lot of hyperlinks over to the tax credit pages that would list off those things. So that specific example may not be there, but it might give you a little bit more insight into whether that's possible, but I don't know off the top of my head.
Sure, thanks.
We do have oh, sorry, your dog is not a service dog, right?
No, it's
Yes. Oh, sorry, wait. Yeah. Is it?
Mine? No.
Yeah.
No.
No. Yeah. Sorry, I got.
Just a pet.
Yeah. A beautiful one, right?
So beautiful. Wade, I might, I'm gonna look into your question. I don't know the answer, but if I can find like a more specific, like Doug said, like a link or something, I can try to send that to you.
Sure. Thanks.
Awesome. Awesome. Any other questions? Okay. Well, I think let's wrap up. So thank you, Doc. Thank you very much for being here today. It's been awesome, lots of information, and sorry.
There's a question. Sorry.
Oh, let's do the question. No worries.
Sherry, do you want to unmute yourself and ask the question and see you have a hands up?
Hi there, thank you. I just have a quick question. Just wondering, I'm applying for the DTC, and if I'm approved at the age of 56, how could I benefit from the Rdsp? Thank you.
If you qualify for it, you won't be able to get the grant and bond money. So that's off the table because you can only get that up until the age of 49. But the money that you put into the Rdsp, the maximum lifetime that can go into it is $200,000. So if you've got money in other places that can go in there, the investment income off of that 200, well, whatever the amount is, will be tax sheltered while it remains inside of the Rdsp. And then there are requirements. You can't leave it in there forever. It does have to come out into your hands eventually, and it will get taxed at that later point in time. So you get tax deferral on the investment income by using the Rdsp in your case. That'd be the main benefit that you would get from doing that.
Thank you, Meridian. Thank you, Doug. Doug, you have been so fabulous. Thank you so much.
I'm just, if you can hold on, don't leave just yet. I think I can see that in the chat function, I can actually share the document that I was referring to within the chat function. I'm just trying to do that.
Oh, cool. Yeah.
I think, did that just go in there?
Yeah.
Okay. That's the piece that I was referring to. And then if anyone asks further, then we can send it to the person directly. But there's the document itself.
Correct. So people go to the chat and click the PDF file that Doug has just shared with us, and lots of great information there to get further learning about all of this.
Sherry, do you have another question? Is your hand raised from before, or is that a new question?
I think that's from before.
Yes, actually I did. Thank you. So if I put any contributions into that Rdsp, would the government contribute anything?
No.
No.
No, not based on your age. There wouldn't be any government contributions into it.
Okay, thank you very much.
Now, the possible qualification to that is if you qualify for because of the disability and the count back in time takes you prior to age 49, possibly in a similar way as Jaspreet, maybe you can step in on this, Jaspreet, possibly the count back of that may entitle you to claim an amount from the grant and bond money that you did not obviously claim up to 10 years ago. Possibly that might be a little bit more of a Hail Mary pass. I'm not sure if that does apply. So maybe Jaspreet, if you're familiar with that, sorry to put you on the spot, whether that might be possible.
I think I missed the first part of the question, but I also might not be the best person to answer this. I did hear someone else start to say something though.
This could be a good question for our presenters next Wednesday at 6 o'clock. Yeah. When we have Steve come in and present on RDSPs. Sherry, I would encourage that you attend that session and ask your questions about RDSP to Steve, because he would be able to respond, I think, or at least guide you in the right spot. We have one more question from TU, and I think that could be our last question for today. TU, why don't you go ahead and ask your question?
Well, what I would like is to have the PDF file sent to me. I have limited use of my hands right now, so I'm unable to write down the
You,
yeah. So
do you have a peer coordinator you're in touch with, or do you have, will you be able to write down my email address and send me because I don't have your email address. I don't see it here. How would we get it to you? Is a question. Why don't you get in touch with me? I will put my email address in the chat. Would it help you at all or no?
it'll take me quite a while to write this down. I don't know how long.
Who's your peer coordinator?
I think I have your, I'm seeing your email in the when you did the
Registration?
The registration, yeah.
Yeah.
So we'll
Federico, you
It's
will send it?
Frank. Yeah.
I'll send the document to your email.
Thank you.
You're welcome, anytime.
Could I get the presentation sent to me as well? It's Wade Cook. I can't write.
Sure,
Wait.
sure.
Okay.
We'll do that. I think it's a good idea to send the document to everyone.
We are planning on sending out the documents to everyone, but if Wade and you are requesting right now, Federico, you can just reach it out, send it out to you and Wade.
Absolutely, I'll do that. No worries. No worries.
I've got no rush. I'll take it whenever it comes.
Okay. Okay. Well, again, thank you, Doug Carroll from Aviso Wealth, for sharing your knowledge with us. It's an eye opener. I'm pretty sure for everyone, and for me, it's an eye opener about how many things I don't know. So we gotta keep learning, right? And thank you, Jasper, for sharing your experience with us. It's been also a learning experience, I guess. Thank you again to Marianne Credit Union for making these presentations possible, to Bergeron and Clifford Injury Lawyers for being our regional sponsors. Thank you to the Insurance Bureau of Canada, IBC, for being our provincial partner, and Hollister for being our preferred medical partner. Thank you all very much for joining us today, and see you next week for the next of the series. Thank you. Have a great day.
Thank you.
Bye, everyone.
Extraño y no debo, te deseo y no quiero malestar en los huesos.